Tom Lee just went on CNBC, and you need to hear this.
Next guest does say that this Friday's inflation data will likely shift the odds higher of a July and September rate cut, supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, head of research and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probably shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut, and really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah, 40% by the end of the summer.
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's, day-to-day, it can be noise, because last week you had the biggest down week for the NASDAQ in quite a long time. So I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation really changing at all? Do you expect any surprises on Friday?
One print can be uncertain, but I think the forces underway for inflation to fall like a rock are in place. The reality is there's a durables recession. It's in housing, and now it's in autos. That's like 60% of the CPI basket is in a decline until the Fed really injects confidence by cutting. And so I think there is urgency for Fed cuts to happen sooner. But at the same time, I think the effect on inflation is there isn't another incremental driver for new inflation. So inflation, I think, is going to surprise to the downside, and hopefully it's Friday.
Energy, same story. I know we've got gasoline futures lowest in a few weeks, and we broke 80 today on WTI. Brent's below the 200-day.
Yeah, I think energy's a tough trade in the near term, because as long as oil's under pressure, I'm not sure I want to be overweight energy stocks. And if there's drilling under Trump, that's downside pressure to oil. But over the next 3 to 5 years, I think energy is a great investment, but I think this year it's not really going to be the spotlight for us.
So there were a couple of things specifically that stood out that Tom Lee said there. Number one, Tom Lee is still expecting a 40% rally in the Russell 2000 over the next 10 weeks. That would be a very aggressive rally, and we've seen a large rally recently, roughly 9% or so in the Russell in the last 2 weeks because of that lower than expected CPI report and the market's pricing in a Trump presidency. As Joe Biden has now stepped out of the presidential race, the odds of a Trump landslide victory are falling. And while Tom Lee says you're just seeing a dead cat bounce kind of reaction today following last week's pain in the S&P. Tom Lee said that the Kamala Harris trade is not necessarily FANG and large cap tech stocks that are outperforming today. Specifically, semiconductors like NVIDIA that are up 5% today, Google's up 2.5%, Meta's up 2.5%, Microsoft's up 1.5%, Amazon's up over 0.5%. These are the leaders. This outperformance of mega cap is pulling up the S&P by about 1% today. But Tom Lee is not expecting this outperformance of large cap to continue. You can see today the Russell 2000 is doing well. It's up almost 1%, but not outpacing the Nasdaq's 1.66% positive gain. The S&P 500 is up 1.06%, and the Dow Jones is up 0.2%. At the same time, the VIX is down almost 10%. Unstrat writes on X, important earnings and macro week ahead. June PCE on Friday will likely shift higher odds of both July and a September cut, supporting the summer of the small cap rally. The most important macro data this week is June PCE released this coming Friday. The reason being we expect this to shift probabilities around a July and September cut. And you can see here that there's been a meaningful decline in PCE expectations, number one, and also the amount of cuts that we're expecting in just the past week, going from 2.8 cuts this year down to 2.5 cuts. And this PCE report on Friday could shift that back up to 2.8 or even 3. Bank of America, Merrill says still a long way to go up to 8,000 on the SPY. Compared to the previous two secular bull markets, the one that started is up only 733% compared to its prior secular bulls at 1,159% and 2,353%. So they're basically saying this market could rally a lot more from here. Supporting the fact that we probably get a pretty good PCE number this Friday is Goldman Sachs core inflation tracker that is now under 2%. Here today, CNN's Fear and Greed Index has flipped back into greed territory at 56. On Friday, you were at 49, so that's quite a big move higher in CNN's Fear and Greed indicator. Market momentum is extreme greed, stock price strength is fear, stock price breadth is fear, put and call options is greed, market volatility is fear, safe haven demand is fear, and junk bond demand is extreme greed. The percent of stocks trading above their 50-day moving average is back on the rise yet again today. You now have 66.34% of stocks currently trading above their 50-day moving average. That means about 3% of all stocks today are breaking above that 50-day moving average. This is up a lot from where we recently were, as low as 35% of stocks trading above their 50-day moving average. Fed funds futures markets by December 18, 2024, the last Fed meeting of this year, are pricing in a probability of 46.2% that we will get 3 cuts by December. So not quite pricing in 3 cuts, but that is the highest odds as of the Fed funds futures market. 2 cuts is priced at 44.3%. Markets are firmly pricing in the first rate cut coming September 18th, 2024. There is a 92.2% chance of at least 1 cut by September, and you can add about 2% for potential 2 cuts. That means overall there's about a 94% chance that we at least get 1 cut by September 18th. The latest AI investor sentiment survey has bullish investors at 52.7%, neutral investors at 23.8%, and bearish investors at 23.4%. 10-year Treasury yields today are up over 2 basis points to 4.26%. This is again helping the larger cap names to outperform relative to small caps. For this Friday's expiration for the S&P, I'm looking at the ETF here, the SPY, which is probably what you guys use to track the S&P as well. You can see open interest on the call side is 28.29%, and open interest on the put side is 71.71%. That means there's 2.5 times as many puts than calls for this Friday's expiration. And if we take a look at the interesting flow sentiment, you have seen 43 different trades totaling $11.29 million with a positive order value of 29%. If we take a look at the triple Qs, which is the NASDAQ 100, you have open interest of 41.71% calls for this Friday's expiration and open interest on the put side of 58.29%. So things look a little bit more bullish here with a put to call ratio of 1.4, which means you only have about 1.5 times as many puts compared to calls. Bank of America's Michael Hartnett says, get your September rate cut, get your small cap rotation, get your Trump win, and you got your soft landing. And here you could see, he writes, the odds of a September 18th cut are at 100%, the odds of a Trump win November 5th, 75%, and the odds of a soft landing over the next 12 months is sitting at 68%, which from his perspective should be good for markets. Goldman's trading desk says, quote, "While it is not easy to call the beginning nor the end of these rotations, it does feel like the highest velocity of de-risking could be behind us as we've checked a number of boxes over the last week, informed by price and rotation velocity already, quote, back in range, coupled with evidence that fundamental trends remain boldly intact. TSM's clean beat and raise supports the view that this isn't a fundamental issue, and a handful of names are arguably back into swing zones ahead of earnings." Mike Zaccardi says retail sales do not suggest the consumer is pulling back. This is from Bank of America's global research. This comes after Elon Musk has said America is going bankrupt. Bespoke writes on X, "From our seasonality tool, the upcoming 3-month period has historically been one of the worst of the year." Stifel's Barry Bannister says, quote, "I was wrong, but ... I've been calling for a 10% correction since May. I'm doing it again. Who cares? Nobody holds me accountable anyway. And if you read every bit of my 10 correction, wise." And here's another post from Mike Zaccardi on X, and it's from Bank of America's Global Research. Again, I just want to point out, Bank of America's Global Research is one of the best institutional research trading desks that you have out there. They did not have a red day for their trading desk in all of the first half of 2024. So these guys are pretty spot on. They say tech's outperformance has been highly correlated to its earnings versus the S&P 500 since the tech bubble. And I think this just continues to highlight how important earnings will be, especially this earnings season. With fears of the economy slowing down, the consumer pulling back, it's not even as much about the prior 3-month earnings, it's more so about the forward guidance. And we do have some pretty important earnings today in after hours. Cleveland Cliffs, Nucor, NXP. NXP does direct business. About 50% of their revenue comes from Apple, Medpace, Crown, Cadence. Cadence is one of those high-flying AI stocks that has done very well in recent years, really lockstep with NVIDIA, AGNC, Alexandria, and Zions Bancorp. Tomorrow, pre-market, Spotify, UPS, GM, GE Aerospace, Coca-Cola, Comcast, Polaris, Philip Morris, and Lockheed Martin. And then tomorrow and after hours, you have Tesla, Alphabet, Enphase, Visa, Texas Instruments, Chubb, Seagate, Capital One, Kane Main Foods, and PCA. So in the grand scope of things, we really have not even gotten started with earnings season just yet. That really kicks off tomorrow with Tesla and Alphabet. So let me know what you think about all of this information down below in the comment section. What do you think is coming next for markets? Hit the like button as well as subscribe to the channel if you made it to the end of this video. Most importantly, enjoy the rest of your day, and I will see you in the next one.